What is good, what is bad? We just published our annual results that are available on our website. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So please take this not as any kind of solicitation for investing in our fund. We're purely doing this to help people understand for what it feels like to run a hedge fund. So our annual results are published, and with that, we also have a presentation traditionally where we talk about what's good and what's bad. We try to keep it simple. I think the world is convoluted enough. We don't need to, on top of that, convolute it even more. We are not caught in that perpetual game of a lot of hedge fund managers, which is to be forced to always have an opinion and always be right or refuse to be wrong about things. We try to avoid that game. We try to be matter of factly, this is what we think, and this is how we act based on that thinking, and that's it. That's really all there is. This is not even wrong podcast. It's January 21st, 2023. This is Crim Telco. It's a Saturday. There's no update. We're up 9% for the year. The market's up 3.5%. We're outperforming by 5.5%. So what's good and what's bad? Let's start with what's good. We believe, like we've had for years now, that artificial intelligence through the instantiation in self-driving cars, the self-driving car is going to be the killer application for consumer-facing physical AI. So this is the most important driving factor of our portfolio. This is where we believe we will create the most wealth. It's related to our concept, which is described on our website on the results section, where we talk about the history of capitalism, and we go from caveman to regenerative growth. What do we mean with that? Is that investing has been often confused with zero-sum games. And maybe during the caveman times, it was some sort of zero-sum game, but it certainly isn't today. Regenerative growth is when you actually add resources by consuming a product or a service. In the case of a Tesla, the more you drive the car, the better the software gets, and the better self-driving technology gets, and the more optionality and freedom customers get, the better the product becomes, the more returns the company has, the higher profits, the more cash they can reinvest in even better technologies. So it's a regenerative growth business model that generates a lot of customer value and very high returns. So this is the first good thing. The second good thing is that Tesla has reduced prices back to roughly pre-pandemic levels. And why is that important? It's important because we always were of the opinion that a company is defined by its cost structure. So a disruptor wins because they have a lower cost. In fact, that's why they're able to disrupt incumbents. It's not that incumbents don't care. It's because incumbents just can't compete with a disruptor that is evolving a new niche and defines that new niche by its cost structure. That's exactly what Tesla is. And Tesla has proven that by lowering prices. We're of the opinion that the margins actually in percent will be as high, if not higher, that maybe in dollars there will be a little bit of a reset, but certainly in terms of percent, we will have very high margins because the cost structure of Tesla is in a leadership situation, and that's really what matters. Another good thing that we mentioned is that Moore's Law is being applied finally to life sciences. So Moore's Law plus biology equals wealth creation. It's one of our bullet points in the good section, and what that means is very similar to the regenerative growth argument with self-driving cars. That you start having products and services where you can have this positive feedback loop, this flywheel, where you add data, where you learn through digitizing biology, then with better data and better analysis. You are able to use first principles, or you're approaching the ability to use first principles in life sciences, which will accelerate medical solutions and nutritional solutions, pharmaceutical solutions, which of course is a huge cost situation right now, where our societies, particularly the Western society, spend a lot of money on healthcare. So we hope that we can add a lot of value through our portfolio companies, particularly Intelia and Beam, the two companies that we have in our portfolio, which are in the CRISPR space. So that's on the good side. On the bad side, we have three items. The one is that the pandemic-related sort of hangover is inflation. So that's still the case. The Fed is has raised rates and stopped that, but it's still a risk. And the other bad thing is, of course, a U.S. recession is looming. And third, and that's something that's been around, it's a chronic problem, which is high U.S. debt and high U.S. deficit. So those are the three things that we believe are the bad things on the macro side, so the big picture, how we think about the world and how we position ourselves given those factors. So to summarize, the good and the bad section in our results portfolio, it's not meant to be some sort of comprehensive macroeconomic analysis or anything like that. I'm sure I'm going to get comments. Oh, well, you forgot this, and what about that, and so on and so forth. I want to mention two things just to clarify a little bit. One is when we say U.S. recession is a bad thing, that is not entirely true, because we believe that recessions are double-edged swords. On the one hand, they put pressure on consumers and companies, economies slow down, but they also open up opportunities for a better future. People get fired, slack gets removed from companies, people get back to their work ethic. One of the pandemic-related inflation-inducing behavioral changes has been that we've seen, let's say, work from home, so white collar, call it lax relationship with work ethics, and then the blue collar, where we had again pandemic-related, let's say, more people calling in sick and not showing up to work and all those stuff along those lines. So all of these things will get improved, or they will get better with the recession. The recession is a double-edged sword, which maybe in the short term, in the short foreseeable future, will create some problems. But in the long run, we actually believe that it's a good thing, and that gets us back to the second most important point we've already mentioned, and that is that Tesla is back to where we think they should be, which is the cost leader and therefore the price leader, the market determinant, the company that determines the market for transportation, self-driving cars, electric cars, cars per se, transportation, anything along those lines for passengers, and soon also for light goods, so i.e. pickup trucks and the heavy duty goods. All of that will be defined by Tesla, not because Elon Musk wants it that way or anything like that. It's because Tesla is the cost leader. A disruptor is defined by their cost structure, and Tesla has proven that the cost structure is on their side, and therefore they're able to lower the prices back, still keep the margins we expect in percent, same if not higher margins for 2023. Maybe not in the first 2 quarters, but overall, thanks to Wright's law and thanks to operating leverage and volume leverage, we believe that Tesla can deliver higher, same or if not higher margins in percent, and also grow dollar sales and dollar profit with volume growth. So to summarize, again, our results section to be taken as pure, hopefully inspirational for people that are interested in running a hedge fund or might want to get into the business, or people who are in the business and who want to learn from our podcast and our presentations. Our material is not meant to solicit investors. Our material is meant to help other people understand what it feels like to run a hedge fund. So looking at the presentation, our annual presentation for 2022, we have a good and a bad section. I think the most important thing on the positive side is that Tesla's back to being a cost leader. And the most important thing on the negative side is that the US high deficit and debt is still a problem. It's a problem in many ways. The US government is becoming too large of a part of the economy. The government has its own agenda, which is not compatible with voluntary free capitalism, ownership-driven capitalism in most cases. And we believe that has to be restrained. So this is definitely it is the biggest risk to our portfolio, to the economy, to the financial markets. So any which way you want to turn this is the largest risk. But we also, of course, again, we have the beauty of disruption and innovation, which is accelerating thanks to artificial intelligence, thanks to the increase in compute, which allows us to represent problems in digital form and then translate those those in digital form presented problems into physical form. And that's our fundamental thesis with Tesla, that self-driving cars is the killer application for real-time AI, consumer-facing real-time AI. Thank you.